what we're going to work on right now is commercial auto. The first thing you need to understand about commercial auto, also known as business auto, so if you get any questions about BAP, it's the exact same thing, okay, as commercial auto. But the first thing you need to understand is that the comparisons between personal auto and business are very, very similar. All right, so the reason why we break down personal auto the way that we do is because when we're talking about commercial auto or business auto, there's not a heck of a lot of differences. And a couple of differences, though, do lie in with what you can drive, okay? So a covered auto, by definition under personal auto, meant what? It was a vehicle on the deck page, or it was an additional vehicle, or a replacement vehicle, or a temporary substitute. Your covered autos, guys, under business auto policies are actually identified by numbers, okay?
Oh.
So the number system is kind of broken down like this. So if they choose option number 1, that means that they're going to be covered for any auto, period. Doesn't matter if it's owned by the business, not owned by the business, and any kind of car that they drive. This is the broadest type of coverage that they have. The only reason why anyone wouldn't be covered here is if they're not an insured, right? But any kind of car, any one of their insureds are driving is covered, but this is also going to be the most expensive as well because it's the most broad, right? As you're going down, though, they're going to kind of narrow down the coverages. If you choose number 2, that means owned autos, and when I use the term owned, we're talking about business, right? The business has to own them, right? So the business owns autos, that's covered underneath number 2. Owned private passenger autos only, that would be a lot more restrictive than that. Of course, number 4, owned autos other than private passenger autos. Of course, if it's owned by any parts of the business, then of course they're going to be subject to no fault benefits, which is PIP, right? Remember, that's what PIP is. No fault benefits is PIP, and subject to the uninsured and underinsured motorist law. So that hasn't changed here. Now, number 7 is the funky one because this is the most restrictive. It's very similar to listing out cars on a deck page. But think about this, guys. If I am in a part of a business where we have a fleet of like 500 or 1,000 different vehicles at one time, would it make sense to describe every single one of them? Of course not. That's why you choose one of these more broader coverages up here, right? It just says as long as the car is owned by the company, we're solid. Or as long as the private passenger car is owned by the company, we're solid. So it gets much more and more restrictive, but that's why larger companies will probably choose some of these choices here instead of like 7 or even 8. What would be 8? It's a hired auto. A hired auto by definition is a rented or a borrowed vehicle, right? So the business per se isn't owning any cars, but they're going to want you to go rent a vehicle or go borrow a vehicle on their behalf. Or number 9, non-owned autos. Why would they choose that? That's when they would want their employees using their own personal auto coverage, or their own personal autos, excuse me, but while driving that personal auto, if anything happened to that car, we could use this policy to pay for the damages instead of asking them to do it on their own, okay? So that's how all of these coverages break down, but hopefully you can saw some similarities even there to some of the definitions of covered auto that we saw earlier. Liability, the exact same kind of coverage, right? Liability is required in the state of Kansas. So if you drive a vehicle in the state of Kansas and you're driving on behalf of your insurance or driving on behalf of your company, it has to have liability insurance on it. What are the minimum auto liability limits? They're the exact same thing. Only now, there's one major difference between commercial auto and personal auto. Personal auto were designed as split limits. Right? Split limits was defined by this little line right here. You couldn't use bodily injury for property damage and vice versa, right? You couldn't bridge this gap. However, in a combined limit policy, which is kind of what we saw yesterday, which is what these are designed as, a minimum single limit, here's what you do. You take your per occurrence from your bodily injury, you take your per occurrence from your property damage, and you add them together. And now you've got $75,000 that you can choose to use toward a bodily injury claim or a property damage claim. So business,
under business.
what's that?
Can you split it between both?
Sure.
Okay.
You just can't use like 75 here and 75 here, right? But remember, under a split limit policy, you never would have been allowed to do that.
Right.
Right? Once you hit this per occurrence limit, that's it. It's done. It's over. Only now, you've actually got the choice to increase that limit just by a little bit.
Okay.
Okay? That's what combined single limit policies mean. And that's what these were actually designed to be, is minimum single limit. Personal auto were split, these are single limit. And now you know where we get that single limit from. We took it from bodily injury and property damage and put it together. Who is the insured people underneath these? Well, the named insured for any covered auto, the owner or anyone else from whom a trailer is hired or borrowed and connected to an auto owned by the named insured. Anyone while using with permission a covered auto, so there's that term again, and anyone liable for the conduct of an insured, but only to the extent of that liability. These are the people that can be driving one of these. What can they, or how do we repair that car if that car is damaged? Of course, that's what Section 3 is covering, our physical damage, right? When we see that term being used, physical damage, who collects? In this case, the business does, right? Business auto policies, the business would collect. They are the ones that are being insured. And of course, the perils are the exact same as we saw under personal auto. You had collision and other than collision. Collision, what are the 3 perils covered there? There's only 2 of them listed, but I want you to write the other one in. Well, number 1 was colliding with an object. Number 2 was when your car was upset. And then number 3 was when your car did what? Roll over. Okay. All 3 of those are covered perils underneath collision coverages. And then anything else that could happen to your vehicle is pretty much going to be covered underneath other than collision, right? We call that comprehensive, including glass breakage, falling objects, being struck by birds, animals, all examples of comprehensive claims. Other specified causes of loss that could be covered underneath comprehensive. Any damage caused by fire, lightning, explosion, theft, we already went over that. That's going to be covered under comp. Windstorm, hail, earthquake, flood, mischief or vandalism, sinking, burning, collision or derailment, or any other conveyance transporting the covered auto. Towing coverage, always a good idea. Adding that back on, that's an endorsement you have to add. Same with rental reimbursement. Of course, you're talking about these massive fleets. If some of those cars go down, are they going to need cars to replace those cars until they can get them back? Of course they will. Okay, so rental reimbursement is something you always see being put on business auto policies, especially if it's a larger fleet. Right? Just because one car goes down, if one of those cars goes down, we need to rent something in order to keep that person on the road, to keep them doing the job that we needed them to do. Okay, so a lot of similarities, right? I can't really say that any better. There are so many similarities between personal auto and business auto. That's why we kind of breezed through those first 3 sections. But we're going to spend a few minutes here talking about Section 4, because Section 4 is our auto conditions. Another word for the word condition is the word provision, a word that we used a lot yesterday, right? We use that word provision a lot. We had like 3 pages of provisions that we went through. And as you remember, those provisions actually had very specific definitions. I told you the context wouldn't change, but the application would, right? So the basic definition, the basic purpose of all these provisions will never change, but the application will. So let's talk about it. We're going to use this as a little bit of a review, okay? So first off, we're going to talk about the definition of these provisions, but then we're going to talk about how they apply to business auto and even personal auto policies. Let's start with that first one, appraisal. Stephen, when I used that term appraisal yesterday, what did that deal with? Why did we need to have an appraisal clause? Because something happened between me and the insurance company. Do you remember what that was?
You didn't agree.
What's that?
You didn't agree.
You didn't agree. So, Stephen, because I didn't agree with my insurance company, what do I now do?
Get an arbiter?
Yep. You get an arbitrator involved. What do? You enter that process called binding arbitration. So you guys didn't come to terms, so you hire a third party. We can get the arbiter involved, or we can get the umpire involved, right? That's the other term we use to describe that third party, okay? And that umpire, when they render their decision is what? Final. Do you think companies have as much disputes with insurance companies as personal people do, or as individuals do? Of course they do. So the appraisal clause isn't just true of personal coverages, right? Of personal lines, it's also true in business. Of course it is. You ever have a dispute with the insurance company, you have the right to enter binding arbitration. But if you do, be prepared that if they don't find in your favor, that you're not going to have any other legal recourse, okay? Duties of the insured. Candy, when we talked about a loss yesterday, I went over 3 specific things that you had to do, the duties of the insured. So Candy, what was the first one? Do you remember? If I suffered a loss, I had to do something first. Do you remember what that was?
Either call the police if it was
Yep. Notify the police if it's a crime, or if it's not a crime, who do I call? The insurance company. What's the second step I need to do after that loss? Protect it from further loss. That's really good, yeah. And I said there was a couple different ways you could do that, right? You could try and add a temporary repair, or you could remove it to from the, or protect it from the other undamaged property, right? And then what was the last step that you did? You had to file something. You remember what that was? It was called the POL. Proof of loss. Okay? You have to file the proof of loss. Within how many days? Anyone remember that time frame?
Isn't it within the 30 days?
Not
No.
30.
10,
Not 10.
60.
This is where you get to prove that you actually did lose something. You show value, you show evidence, you show receipts. That's all part of the value, duties of the insured. Don't you think that's also going to be true in business auto coverages as well? Of course. You think they have to prove insurable interest? Of course they do. Same way as everyone else does. Okay? Do you think if they've been the victim of a crime, that